Economists have argued for a long time now over whether China's breakneck economic growth will come to a grinding halt and a hard landing. The latest figures, however, may have some re-examining their predictions. Lenora Chu is in Shanghai. Lenora, these were better than expected indicators.
Hi, Michelle. That's right. We've got government stimulus measures kicking in, and yesterday we saw the results. That 7.5% growth rate that you just mentioned, that's a touch higher than the predicted 7.4%. Now, we've seen a series of support measures go into effect. Infrastructure investment, more bank lending, reduction of reserve ratios. Regional governments in China have also been asked to quicken spending and speed up construction and railway housing. It's all to offset the drag from weak exports and a cooling property sector. But, the mainland stock markets shrugged off the good news. In early trading, shares ticked up. But by the end of the day, the Shanghai Composite was down 0.2% to finish at 2,067 points. Clearly, investors are still worried about something.
All right, a lot of concern still lingering there, as you can see. Lenora, what are the analysts saying that Beijing will do going forward regarding further policy support?
Sure. Well, the equation is simple. Further economic recovery is dependent on more stimulus. And most analysts have been surprised by how serious Beijing seems to be about hitting that target of 7.5% growth for the year. Now, if you'll remember, the language coming out of Beijing has been more about fine-tuning policy to support the economy, but actions speak louder than words, especially with the hefty increase in June's bank lending. Now, some analysts are calling what they see signs of the government's alarm about a slowdown. So most analysts expect stimulus to pick up in the second half, especially if the property sector continues to drag. In a CNN Money survey, 8 out of 10 economists said that real estate does indeed pose the biggest threat to the economy. The previous 3 quarters, they'd cited credit growth as the biggest concern. Now, the biggest issue is real estate oversupply. Cities are offering discounts and other incentives to unload property, and real estate prices are falling. That's a concern as the sector makes up an estimated 20% of Chinese GDP.